Welcome back to the channel. We've got another market recap, this time for Tuesday, October the 7th, and we had a down day today. Let's zoom in a little bit and take a look at this down candle here. This is Tuesday's candle, the 7th of October. We'll come back to this chart a little later and dig into some more details. First, here are the levels that were posted this morning. 9:16 a.m. You can look at the levels and read through the game plan. Point out a couple of things here. The main thing is I just kind of had a feeling. I didn't want to say that I thought the market might go down today. I just said that something was going on that I couldn't quite put my finger on. Like I have a gut feeling something's going to happen. Something big might happen sooner than later. Nothing I wanted to bet on. I didn't want to say, I think the market's going to go down, because I had nothing really to base that opinion on. It's just that price was once again approaching the highs. And the last few mornings, price was up at new all-time highs. They got rejected. Don't see any reason why the bulls can't get up to that trend line, but they keep stalling out. So they did fall, but I didn't really want to call it. I just said to be careful. Had some levels to trade against, and as you know, the trades we take typically are counter trend trades. So a reaction in the opposite direction. But that being said, we went into the open session with this information, and now let's look at how it worked out. If you were playing by the rules, your first trade would have been a long trade at 671.65. We're adding 5 cents to the official level to give ourselves a little bit of a buffer here. They came down not within 10 cents, but 11 cents. And that technically does not count as a near miss. When I saw that happen, I decided not to trigger a trade, just wasn't feeling it. But then again, I wasn't even feeling it before the market opened. But we're playing by the rules. So if you bought E-mini contracts when the SPY came down and touched 671.65, obviously you did not get the bounce, but where would you have been wrong? You would have jumped out of the trade, reversed the trade when you were 6.75, so 6.75 points out of the money, and reversed it, and they continue to fall. Once again, if you're trusting your gut, you probably wouldn't have traded 670.08, but we're going to say for consistency, we're triggering the trade in the E-minis when the SPY hit 670.13. That's our 5 cent buffer out of the money. Not enough to call this a max loss limit. Plus, by the way, one of the rules is if you have a signal to reverse in a trade that's out of the money, and the when and where of that is explained in the course that I put together, and you know that there is a level within maybe 50 cents or so of where you're at currently, you probably don't want to reverse. You probably want to wait to the next level, because if you were to average in across those two levels, you're more likely to get a bounce. It's just something that works more often than not. But in this case, they came down. Let's see, there's your 5 cent buffer. Not enough, 20 cents or so. But the point is, you're still in this trade. And yes, you would have had a reversal signal, this time about 6 points out of the money, reversed it, and got a base hit or 4 points to wash out most of that as they continue to fall. And once again, if you were to buy at 668.64, expecting a bigger bounce, this time they gave it to you. You got a 4-point base hit right there, being out of the money a little bit, but this was the kind of the destination. 668.64 or 668.56, the official level from the morning, was support for most of the rest of the day. But all told, a down day. Here is my trading activity. As I mentioned already, when I saw that first attempted near miss, it was 11 cents. So if you're being precise about it, it wasn't 10 cents. So, but I just wasn't feeling it. So here is right there is when I canceled my trade. I considered that level done, didn't want to trust it. And I just sat back and made the decision to really not do anything. So I took no trades, and this is the proof of it. And I'm just going to scrub ahead for the rest of the day. Made the decision right there. All levels went dotted, and I just kind of watched them do their thing. I let this thing go till about lunch, I think, maybe a little after 12 noon. There we go, and then stop recording. How does all of that translate on our tracking logs? Well, here's the playing by the rules log. You can read the notes. Started with level 3. There's a 6.75 point fumble, reverse, base hit. Down to the next level, a 6-point fumble, reverse that. Got another base hit or 4 points on that reversal. And then the last level down at 668.56 was the only level that actually worked as planned. So if you played by the rules and were precise enough and diligent enough, here's about where you would have landed. Of course, these are for commission P&Ls. And then here is my log, the Sam's Trades log. No trades taken, pretty much end of the day on the flat line. There seems to be something around 270, 250 to 273 that they can't seem to get above. Let's kind of get in here a little bit closer. We have this trend line above, and possibly there's some trend lines, as I mentioned in the game plan, or some areas of overhead resistance that are lower. Like if I were just to snap a line here, this is kind of arbitrary, but if I were to snap a line like from this pivot to this pivot, somewhere in this neighborhood, you've got some areas that will probably serve as resistance if price gets up there, but they really can't seem to get anywhere close to it, much less this main trend line, which does have some importance. So you start looking at some smaller time frames, kind of wonder what's going on. Here's an hour, 30 minutes, getting below some moving averages. Doesn't really matter so much on these smaller time frames. Here's a 15-minute chart, but something's going on. And then in other markets and some other indexes, some other markets that I track, here's some IWM, the Qs, and financials here, the XLF. These are all down as well today, and just looks interesting what's happening. Most of them are in different places. The IWM, for example, has already had an all-time high. I guess this is back in November of 2024. No, the first time was in 21. The point is, they're just fighting the same area. They're nowhere in the same position as the SPY. These are the small cap Russell 2000s. Dow Jones Transportation, they're getting above this kind of triangle consolidation they've been for a while. Been tracking this for quite a while, and they gave it up and closed well below. So what do we have here? Let's go with an hourly chart. So that doesn't look too good. And the reason I look at these because the transportations and the IWM in particular tend to lead the SPY. So I want to see what they're doing. Don't really have a whole lot to add. Let's keep an eye on the weekly chart, by the way, because as we know, we had this doji candle from now 2 weeks ago, and it could be not valid anymore because we did get a weekly close above it. But are they going to come back down and start challenging that? That is a reversal signal typically. The timing's good. We don't have tremendous volume. But anyway, something to look at. Don't want to lose track of the high of that. The high of that weekly candle, once again, was 667.34. Let's go ahead and put a line right there as a reference. 667.34. Let's see what they do with that by the end of the week. That's all I have for today. Short and sweet. Just want to go on record, per usual, to show the levels and the game plan and show how they performed. That's how I know this approach works over the long run. Kind of a paint by numbers, following the process each and every day. Thanks for watching. I will talk to you again soon. Have a great rest of your day.